Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, guys, so we're going to start with the news and then we're going to hop into the charts. And man, am I excited to talk about the charts because it's been quite a while since I've done a recap. It's been about a week, and so much has developed in the markets. And I feel like us in Lemon Garden, at least us in the premium service, we have found ourselves in a really, really good spot, especially in crypto. So I can't wait to talk about that. But before we get to that, let's talk about the news. So it's been a pretty light news week. Coming in for tomorrow, we are going to get the U.S. initial jobless claim. So, that's going to be fairly important, at least early in the morning. May cause some volatility in the dollar, but we'll get a good idea of what we're looking at in the jobs market. And then we do get a U.S. existing home sales, and again, similar, we are going to get some volatility from that. Nothing too major, I would assume, but we will get some volatility going into the dollar from that. And then we got the EIA crude oil inventory, so we'll get a good idea of what's going on with the crude oil, and that may affect the oil price. It may not have an immediate effect, but it may be a forward looking sentiment that we could use potentially. Because if you are in the premium service, I've recently been taking positions on oil ETFs, so we are going to keep our eye on that, like I always do. But again, we'll just keep our eye and see how it develops into the summer. All right, so that is the news that is relevant coming to us now. Let's go into the charts. We'll get rid of that tab. All right, so the dollar. Okay, so let's touch on the dollar. So as you can see, we have a lot of doodles from my last recap. I have not taken anything off, haven't moved anything, and so far price is funny enough actually kind of defended this little arc here, this little doodle I made here. But essentially, I was highlighting a higher low structure was likely going to start getting built somewhere around this zone. Now, we did have a really bearish close on this daily candle, so I wouldn't be surprised if we do see more downside. However, the dollar is in a squeezing structure, right? So what I mean by that is you have this high here, then a lower high, and then you have equal lows here. So it's creating what we would call like a triangle of some sort, right? So a descending wedge, descending triangle, however you want to define it, it doesn't really matter. The volatility is contracting here, all right? So we could be looking at, yes, maybe a higher low. We could be looking at, again, equal lows. But the point is, as long as we're in this contractual structure, and let's get rid of all these doodles just to clean this up, you want to look at the dollar as potentially seeing some eventual upside. Okay, so the bias of this structure does have to be on the bias for upside. Okay, got a big move down, and now it's attempting to essentially have a descending structure, because this is descending, and then looking to break up. Okay, now if this was ascending, so if this was actually, we broke down and then we were doing something like this where we were rising up, that's going to have a more bearish tone to it, more bear bias to it, but that's not what we're in. So even though the dollar's coming down, you want to be very careful getting too bearish on it too quickly, especially while we're in this potential structure being built. We're also repeatedly tapping onto this monthly bullish fair value gap, so it's a major monthly level, a lot of liquidity there. And then this blue zone we're trading in, like I've said in multiple recaps before, this is a 5+ year, 7-year support zone. Okay, we broke through it for the first time in a long time, and we've come back and we've been trading it. So that's actually a really bullish signal. So don't want to get too bearish on dollar, so be very careful on that. But again, you want to respect we are in a squeezing structure, which is good, because that means that a lot of the sell pressure that a rising dollar would bring may not be happening in the near future. We may be chilling in here for a couple weeks, maybe even a month or two. You never know. There's plenty of room here to trade through, but in the end, we are looking for an upside break, because that's what the probabilities are telling us to look for. If we have a downside break, well, that's great, because we're long for pretty much everything. So not going to complain. And if we do break down, obviously you're looking at the lower monthly fair value gap here, but the probabilities are pretty clear as of now that we are looking for a higher low structure to end up forming here that will then eventually lead to at least a test of this daily downtrend line. All right, so now let's go over towards the U.S. indices and see how they've been performing. So the U.S. 30, we're looking at the Dow here. So Dow is first. So essentially, I used to have a bunch of doodles on here. Again, reference past recaps, and I always tell people watch the previous recaps, because that way you can keep me, up to date. And that, like, hey, you said this. Again, make sure to watch the previous recaps, because a lot of the information I'm saying is going to have validity into the future, because we're talking very far out. So things I say in this recap per se may actually be referenced later in the month, or next month, because it happened, right? So a lot of times I find that I'm saying something and it tends to play out a bit later, rather than the very next day, because I don't really look for the very next day's move. I don't really care about that. I'm looking for the structure and the ultimate bias that we're looking at. And in past recaps, I've said, watch while we're all down, coming down into here, watch for this to cup out here, pretty much have a nice break into this liquid zone, and then break up. And what would it do? I said watch for these pivots here to get taken out. That's exactly what happened. So all that buy side liquidity got tapped into. Now if we took that out and we were going to go higher, this would be the next level to look for, which is about 35,500, 34,000, just this general zone, grabbing all the liquidity in this fair value gap and then tapping into the buy side above these pivots here. So this will be the next level, and we could definitely get there. However, as price action showing you, it's likely going to have to make a higher low. So after pretty much beautiful move up, bullish consolidation, boom up, and now looking for that higher low structure to have another leg up potentially. So that's what we're going to be looking for on the Dow. If we're going to have weakness coming into the dollar, or at least stability where it's not rising or going down too heavily, then we're going to be looking for consolidation that will have a bullish leaning towards the Dow, and then that bullish consolidation will be gathering fuel to attempt to break past these higher pivots and then eventually make its way to the high pivots up here that we have marked out. Okay, so I am very bullish on the Dow, but right now I am fairly neutral, because if the dollar does start to show strength, then you're going to see a nice retracement coming back to these liquidity levels. And once it retraces back to here, there's actually a good scenario where it actually just does hold here, and we go into a bit of a larger range. Because if you look at the monthly time frames, we'll go to the monthly real quickly. Take a look at this. The monthly has been very clear at being at a clear range, in my opinion. I mean, this has been actually pretty impressive, and I will say this behavior does make me call into question: are we in a bear market rally, or did we bottom here and now we're doing a bullish consolidation on the monthly to then break up higher? Right? I actually talked about this in a live stream I did today in the Discord. So if you're not in the Discord, make sure you are in there, because I do live streams and a bunch of other stuff that's specific for the Discord, and it's totally free. You'll find the link in the description below. But essentially, I was questioning, the thesis that maybe we did bottom out and we are going to break up higher, because if we do break these pivots here and we get towards the 35,500, there's really not that much stopping us up here. But again, you don't want to jump the gun on anything. The only thing I can say for sure is this consolidation here is not what you normally see when you're looking for a macro lower high. This is normally a continuation. And the continuation, it's going to be really, really interesting to see if the price action will actually stop up here when this consolidation kind of implies taking the highs, right? So we'll have to wait and see how the Dow behaves. But I will say, if you look at the S&P and NASDAQ, they tell a different story. So S&P, look at this. So this is more akin to what you're looking for if you're looking for like a lower high on the macro. So you have the all-time high, then you have your correction, break up, and then if you're going to have a bear market, you're going to have this lower high here from the all-time high up here. And this is how it looks. No consolidation near the zone. You're just breaking up, and then eventually you get a rejection or a slowdown, and then that leads to the next leg down. That's what you normally look for, and this is more of that standard structure. But the Dow does, let's go back real quick, take a look. It looks different, right? It's actually quite different. So, you have to be we have to keep our eye on that, because the Dow could be telling us a different story compared to the S&P and NASDAQ. And believe it or not, if the Dow does it, eventually the S&P will do it, and eventually the NASDAQ will do it. Okay, so we'll keep our eye on it. But so far, S&P came into the 4,400 area, 4,500 areas. Go down to the daily, get a better view. So look at this, came in, filled these fair value gaps. So we can actually take these off the chart now, because they're all filled, except for this one up here. This most got wicked through, and now we're showing some weakness here, as we expected, considering how much we pulled back. I would look for continued downside going down to like 4,300. It's about 4,350, 4,330, I should say. So around this area here. Once we get towards this top side, this small low consolidation, you may see a little bit of some bids coming in to kind of slow down the selling. But overall, I would be looking for a consolidation on this, just like I would be on the Dow. Very impressive break, very impressive move. But we have tapped a lot of liquidity, and if we are going to go higher, We're going to likely pull back into the 4,300, maybe even sub 43, going back down towards the low end of this consolidation, towards like 4,250, taking that sell side liquidity, and then popping up from there and maybe trying to challenge this high we made here. And if we do that, then we're looking at a pretty major move going towards like 46 to even 4,700. So it would be pretty major if we did that, and it's possible. I mean, we're not that far away, but again, we'll just let price action do its thing, and we'll adapt as it happens. Next is the NASDAQ, and the NASDAQ, as you can see, has just been non-stop, been very impressive. The whole AI boom in tech has really propelled the NASDAQ to levels I did not think it would get to. But look at this beautiful rocketing move, and now looking at this price action, it seems very clear that we're likely going to see a pullback that's coming back into the orange zone. I did say here that I was looking for it to potentially trade on top of it or pull back into it, and I did mention, I think one of the recaps, either the last one or one before last, that if it did pull up, that we would still see a pullback as we came to this fair value gap up here, and still make it back into the orange zone. The orange zone is very likely to get revisited, whether it's on the top or right within. I'm leaning towards trading within, taking these lows out here and trading between about 13,900 and 14,200, so around this zone here, and I'll probably lead to like a pretty major consolidation unless the dollar at that time starts to really strengthen. Then you can see some major weakness coming into the market. All right, next is oil. So let's talk about oil real quick. Get a look at what's going on with oil. So looking at with oil, you see it's trading in this zone still, a 5-year plus zone here, very similar to the dollar. It was under this zone for years, broke out of it for the first time in 5+ years, came back, and now is consolidating within. So this is really, really strong. And look at the consolidation. If you notice, I mean, it may not seem super clear, but we broke up here, then we had the Saudis pretty much cut supply, and we had another gap right here because the Saudis cut exports even more. So it's another way of just saying they're cutting supply again. But if you notice, there's been these buy up wicks here. So there's a base that's trying to be held. And I'm telling you, as time goes on, if we take a look at the weekly here, so let's go to the weekly here, take a look at this. The weekly to me is telling me a pretty clear story that this consolidation is likely going to lead to a curling here, like an up curl here, that will lead to a move at least back to 90, but I'm seeing much higher. I'm looking for the buy side liquidity here, going to 95 plus, and then eventually tapping 100 again. And what will be interesting is, as we go further into the summer, namely going into July and then August, how will the consumption of oil be? Will it be lower? Will it be higher? How will the demand be? And I have a feeling that we're going to see more and more signs coming out of Saudi Arabia of cutting supply, cutting exports. They're going to keep doing it, in my opinion. So we're probably going to see an artificial push in oil. Now, will it lead to major moves up? I think it will, but there is a concerted effort to keep oil price down, especially if we're going to go into some sort of conflict. At least that'll be the hope. They'll try and keep oil price down, but they never really do. It usually always makes its way up in those sort of environments. So, looking at oil, I have to be really, really bullish, like I have been for a long period of time. And what do I always tell you guys? If you see price action start grinding, going into like support zones, you gotta be really careful of getting too bearish too quickly. Usually a pop it comes right after this. So it is the weekly, so it could take quite a while, but we've been here for quite some time. Next is gold and silver. So gold and silver. So gold has done pretty much what we were looking for. Now, it didn't have the rise up here I was looking for, but it did come and tap into this general zone. I do find this zone to be of great demand. So between 1930 and 1890, we did tap into here and here. I do think we could see more downside coming into this level and then actually start trading in here. But if you look at this price action here, let's actually get rid of some of these doodles because I think they've served their purpose. We'll get rid of this one, get rid of this one, and we'll get rid of this one here. I'll keep these down here. But if you notice the price action here, and we broke down, we slowed the selling, and now we're starting to grind down here. So what's going to be interesting here is as we're building this out, will we just cave down and pretty much go back to the 1890s, or will we have a slight pop coming back towards the 19s, maybe even like 2000 again. It's all within, within reason. And if we do pop up again, this will be the ultimate target area right here at about 1993 to 2007. And the reason why this is actually more likely, this pop-up, is because if gold is done for the foreseeable future, okay, and this was the new all-time highs we did wick through, it's very common to make a last resort move to try and take the highs again, make a lower high, and then break down further. It's very common. It happens with most assets when they go into like a major move, a major structure, and then especially when you usually take highs. Now, I will say this sort of grab of this high in 2022, that's not how it normally goes. That usually is a failure. So we may not even have the fuel to do this. But in my opinion, as this structure is being built, I do have to have a slight short-term bullish bias on it to see that move back to the 2000s, or at least towards like 1980 or 1990. But once we get there, I'd be very, very careful getting too bullish, unless we see like war ramping up incredibly or something like that, something really, really, really bearish hitting the world. Okay. All right. Next is silver. So we'll do a quick look at silver. So silver, similar story, but like always, a little bit more impulsive. At least on the downside, hasn't been as impulsive on the upside. But so far, just trading within this general zone. I haven't taken off this fair value gap here because it's still relevant. As you can see, price action is respecting this general zone. There's a lot of activity here. It's a low end of this consolidation, and it's also tapping 2240 22.5. That general area is going to be of a lot of interest, a lot of demand, but I still see eventually us breaking lower, going back down towards 22, and then back down towards like 21.5, and then 21.3, and then really basing down here and seeing if we can hold this low here and make a higher low. That's what I really see is going to be the attempt here. Okay. All right, so let's go into Bitcoin. Let's take a quick look at the cryptos. So we'll pull up Discord Crypto here. So currently, right now, the new daily candle just opened up. These are all the cryptos that the premium service is in on. Matic is a free trade for the members, and then let's take a quick look at Bitcoin. So, what a move on Bitcoin! It's been absolutely incredible. So we got in at about 26,800, and it's been a pretty awesome entry. And so far, the strength of this move is not that shocking, right? Because if you watch my last recap, or if you're in the Discord, I've said, this squeezing structure was likely going to lead to a very violent move to the upside. A lot of people have been bearish, and then people were bearish before the SEC stuff. I was bullish, and then the SEC stuff happened, and people got really, really bearish. A lot of bulls got scared out of being bullish, but I doubled down, and I felt really confident. I ended up buying a ton of positions, adding a ton of positions during the SEC altcoin craze, and they have served us well. We'll touch on a couple of them, but looking at Bitcoin, I've always said, in a bunch of different recaps, when price has a major move up, right? Major move up, you can tell, you can see it, and then it goes into like this grinding structure that leans down. That's usually when smart money is accumulating a position, a bullish position, by the way, because if you're buying something, you want to try and buy it cheaper, not more expensive. And it's the same thing if you're selling something. So if you watch my recaps, you've been following me, I've said this over and over and over, and it's really important to understand so you can take advantage of these opportunities. So when you move up really hard and then you start grinding down, especially if it starts to kind of contract like this was, you want to look for potential breakout to the upside, and that's exactly what we got. And it's the same thing to the downside, right? You have a big move down like this, and then price just slowly grinds up and it's contracting, right? So you want to make sure that you're not getting caught in this grind up, because smart money is looking to sell. They're opening up shorts, they're slowly selling, and they're slowly pulling up the dumb money that's buying here, so then when they're finally ready, they dump it on them and they cause the panic, right? They cause those buyers to close out, and that causes the whole snowball effect. So it's the same thing with upside. If you went on Twitter, you went on YouTube, so many, especially after the SEC stuff, some of you were saying it was over. That was it. It's all done, and everyone was like, "Oh my gosh, I got a short, or I got to sell everything." And it's just very disheartening. It's very tough, and it's very sad, because this is a huge opportunity for everyone to find themselves in a really good opportune position. So it's not just Bitcoin. There's a ton of like altcoins, and it's such a good time to have bought was during that whole SEC drop. And it's very sad to see when people miss out on it. Now, it's not the end of the world. It's all a learning experience. So if you were one of those people that end up missing out on it, understand why you did, right? Whatever the reason was, really think about why you did, and learn from it, and then you'll find yourself ready for the next opportunity, because it'll come. It'll come. So don't be disheartened. Everyone has to learn at some point. But make this the time you did learn, and you don't have to go through it again. So currently, right now for Bitcoin, there's a lot of questions on where is it going. It's going to stop here at 30,000. This is fake. It's going to break down. I've been seeing a whole bunch. I got a whole bunch of people saying it's going to 30,500 or 31,000, 32,000. Now, what I'm going to tell you is this. I do see 32, 33, 34 for sure. It's definitely in the ballpark, right? But, what kind of breakout is this? A lot of people think this is a daily breakout, and they're incorrect. It's not a daily breakout. This is actually a weekly breakout, okay? This is a weekly breakout on Bitcoin. Let me actually fix this here. Go back to auto day. Oh, actually, whoops, I put on the monthly. Let's go back to weekly. All right, so this is a weekly breakout. So it's not even the daily. Now, we have 4 days left in the weekly candle here. So depending on how we close, will determine, are we actually, this could be false, right? So maybe throughout the rest of this week, we get sold all the way back down, or we're going to get bought back up, or we're going to trade around here, slightly above, slightly below where we're at, potentially. Either way, if this confirms as the breakout on the weekly, as I suspect it will, you're not looking at a move that's going to likely stop at 32, 33, 34. Now, it may stop for some time, but it's more likely you're going to actually have a pretty big move going towards like 37, 36,000, so towards the top of the bearish monthly fair value gap. And yes, I know you see 50,000 here. It's in the discussion. Now, it's not something I'm particularly targeting, but it is where I can see it getting to potentially. Now, if it gets there, it doesn't mean that Bitcoin's super bullish. All of a sudden, we're going to take the all-time highs. Not saying that, but if it does get to there, what I would tell you is, if this is a bear market rally, that's damn near the top, right? So I don't know if it is, but if it is, that would be the damn near top. So I'm not saying to buy, because we're going to 50. I'm not saying to short 50. I have no idea. All I'm saying is that if you're long, I would say kind of sit tight until potentially we start trading into the bearish monthly fair value gap, which is pretty much in between 31,900 to 37,500. Okay, that's where I kind of see Bitcoin getting to, in between those zones. And that's where I'm going to hold Bitcoin until. I'm probably going to close somewhere within there. Granted, if price action tells me not to, I won't. But if you're a member in the premium service, and you're along with me, which I hope you are, then know that I plan to hold until we get into there, unless price action tells me. And like always, I will always notify you if something has changed, whether it's good or bad. But other than that, we caught this breakout, and it's bullish. I mean, now we're in the breakout mode, and pretty much to stay out of the way. We'll see if we fail it and we break down, or we're gonna have continuation. In my opinion, obviously, we're gonna have continuation. And if you take a look at the crypto market, there's a lot of different different cryptos that are showing signs of major bullishness on the weekly time frames. Okay, like major bullishness. Let's see if I can find one here. So here, like STX, right? We'll use STX as an example. So we actually were in STX. If you're a premium member, we were in it. If you're in the Discord, you would have saw that we closed it. We had like a 20+% trade on this one. Very awesome trade. And look at this. Look at this on the weekly real quick. So this is what a lot of cryptos are looking like. This, like, unbelievable, guys. Freaking believable. And you have everyone on Twitter, on YouTube, talking all bearish and stuff. I'm like, this is crazy bullish. You had this pretty significant move down for a very good period of time. Took out these pivots on this rise, right? So you took out those pivots. That means character has pretty much changed, or it's beginning to change. And not only that, you then have a grind down, a channel down on the daily, and then essentially you tap into this liquid zone and then pop. Absolutely textbook. Absolutely textbook. Made your lows, lower low, lower low, lower high, boom, higher high for the first time, taking these highs out, and then look, boom, higher low. So total character change, total trend change. You got the whole freaking market all scared about the SEC and this nonsense when the charts are telling you be fucking bullish. What is wrong? What is wrong? So stop getting affected by nonsense. Okay, there's a huge freaking opportunity. Seriously, I don't understand it. And if you can't trade this by yourself, join the Discord and join the service. Seriously, this is a massive opportunity. There's a ton of cryptos like this. There are a ton of cryptos like this. It's incredible. It's incredible. Look what BCH did today. Look what BCH did today. Absolutely incredible. Actually incredible. Look what it did. Came right into the bullish weekly fair value gap and pop. Beautiful. Here's one. I'll give you guys one right now. AVAX. Look at AVAX. Does that look bearish to you? Does this look bearish to you? You have a massive drop down on the weekly, and now what are you doing? What are you doing? You're starting to contract. You're starting to contract. If this looks bearish to you, you need to stop. You do not trade. Do not invest. You need to go learn something. This is bullish. This is bullish. This is what you should be looking for. This behavior is bullish. And if you notice something even cooler about what's happening here, so take a look at this with AVAX. We have the breakdown, you have this doji, and now you're getting a bullish engulfing. Okay, so what this tends to mean is you have an actual pivot structure here that's likely to confirm. Again, we do have 4 days left, so anything can happen, but most likely this will confirm. And take a look at this. It's actually a slight higher low from this low here. So you actually have character changing inside of this bullish descending wedge. So this is a bull signal. AVAX is going to go nuts. Granted, any bad news can change everything, but take a look at what happens. If AVAX does a measured move, now it may not everything does, but if it does, you're looking at a move going to 40 to 50 bucks. And even if it does not that, and it goes just to the top of this wick, that's 30 bucks. That's over 100%. Guys, you don't need leverage. You don't need to overthink this. You don't need to overthink this bullshit of I got the algorithm, I got this and that, blah, 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 look at the indicator. That it does not matter. It's so irrelevant. If you can play the breakout, you can play the pattern, just be consistent, have your risk under control. Use 10, 20% of your account, risk 1 to 5% of the 10 to 20% of your account, and you're golden. That's all you got to do. That's literally all you have to do. If you want to wait for the breakout, buy the breakout. If you want to buy within here, that's fine. Have your invalidation under the low. That's simple. It's that simple. Okay? It really is. You don't have to overthink anything. Seriously. If you'd like to learn how to trade, I do have a tutoring service. If you just want to trade with me, I do have a day trading room. If you want to join the swing trade service, where I'm always just looking at charts and calling shit out, I have that service as well. You'll find the Patreon link down below, and you'll find the Discord link down below also. So make sure to join the Discord. That's totally free. And I do free trades. Almost a month per month, but not always, because sometimes the trades will last longer. It just depends on what's going on. Right now, Matic is our trade right now. So currently, Matic, I think we're currently in the red or slightly. Yeah, we're slightly in the red. So this is the free trade I gave to the members, to all members of the Discord, whether they're premium or not. So currently, we're trading virtually break even, slightly in the red. But again, watch for Matic to make that move, going towards the 70s and potentially back to the 80s, which is generally where I want to target. Right. So again, it's not rocket science. You're just buying the liquid levels, and all this drop on the SEC right here. What did I do with Matic? I bought Matic. I bought even more, nonstop, and it got our average down to 68.38. So my best advice for anyone who's trying to trade for themselves, you want to, in my opinion, I wouldn't use leverage, or at least use minimum leverage. I don't think leverage is really that useful, depending on your strategy. Secondly, position sizing is key. Start small, become big. If you just do that, and then have a set limit on each position prior to putting money in. So if you want to risk, 10% of your account on Matic, and of that 10% you're risking 2-3%, fine. But have that limit set before you make any trades. And if you do that over and over and over and over and over, you'll find that your money grows. You'll find that your account grows, and you'll find that what was once small is fucking huge, right? All right, guys, that is it. That is it for the spiel. Again, if you have any questions, make sure to leave a comment down below. If you want to join the Discord, like I said, just check out the description. Everything you need is in the description. And if you'd like to join any of the services, you'll find the details on the Patreon or in the Discord. So, again, you can join that either way. All right, guys, remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.